Hey everybody, it's Seth and Paul for the Every Morning Channel. Today, Paul goes over Boeing stock. Boeing's had a hell of a year, highs and lows from $400 all the way down to $89. Where should we buy? What's a good price for this stock? Follow along the Everything Money channel right now for Paul's analysis of Boeing, baby. Paul, we're talking about a company today that's very near and dear to my heart because my company, DGF, Dry Graphite Film Spray, sells to Boeing. They spray my product in their engines. They can't live without it. Boeing had a huge week this week, ups and downs. Tell me about the health of this company using the Y charts. Go, Paul. I love you. Oh, wait. But first, Paul, of course, please smash that like button below. Yeah! Smash that button so I can get paid, Don can get paid, and Paul can pay us. Paul, go ahead and talk about Boeing, what you love and don't love about this company and its stock.
All right, so Boeing has had a very tough go of it the last couple of years, right? So the hard part about Boeing here is they have lost money for the last year and change. Then the recent shutdown of coronavirus has made it even harder. There's going to be a lot less planes being bought for a little bit of time. But part of what we do in investing is you take outlier situations, and try to figure out, okay, what is the company probably worth when things are normal? Mm-hmm. We're not going to do an Excel analysis here. We're going to talk about a general idea of what Boeing would be worth when it was stable, when it's stable, okay? So we have a video in the past where we talk about how we view a company, what the major things we look at it for a company, right? So with Boeing here, as you can tell, year to date, it had a high of about 350 maybe or so.
Wow, this is past February.
So in January and February, it was upwards of $350 per share. It got as low as,
look at that.
It got as low as 95. I think 89 was the lowest I remember seeing it at. Mm-hmm. The bottom line is, when people talk about companies that are big not falling this much, it happened, right? And this is after the Supermax 8 problem. The Supermax 8 problem was occurring last year. If everybody remembers what happened, that two planes had crashed. 2 or 3 planes had crashed randomly. They shut down the planes, and that was a big problem for Boeing. So Boeing, what I want to do first is look at their financials, because it's going to include last year where they lost money and then the previous years when they made money. So by year, 2019. Now, as we went back, we sat there and said, let's go back in history, and I kind of want a different color here. In 2010, they did $64 billion in revenue. As you can see, it grew very consistently.
86, 90, 96, 94, 101.
And look what happened in 2019.
76 billion.
Oh boy, it dropped big time, right? A big part of it was losing the Supermax. A lot of people canceled orders, etc. Revenue wasn't coming in. If you look at their profit, the next thing I look at, $3.3 billion in 2010. All right, nice and steady, oh, poop.
Uh-oh.
They lost $500 million in 2019.
Yikes.
Right, yikes, but what we care about is, do we think Boeing is one of those companies that's going under? I don't think so. Mm-hmm. So when I look at that, I'm going to take out the extremes. Just like if a company had some random one-time event that occurred that made it a lot of money, would you base the company's value based on that one-time event? No. I look at this as hopefully a one-time event. This is a situation they're going to have to pay for, but it's not going to hurt them for the next 30 years. It's going to hurt them for a couple of years. And that's what good investing is about. It's about taking information and saying, is this a one-time event to the negative that I can capitalize on? And I think Boeing has that potential. So I'm basically not even going to look at last year for the time being. I'm going to look at their previous years and say, okay, how much they make over the previous 10 years? And is there some sort of gauge of where it could be, okay? If you guys remember, one of the things we look at is number of shares outstanding. One thing I like is, in 2010, they had 735 million shares outstanding. 2019, they had 565. So what this means is they're taking their profit and dividing it amongst less shares. So every shareholder now gets a bigger chunk of their profit. Mm-hmm. That is a good thing for shareholders, as long as they're taking their cash and as long as the stock was undervalued. Now, was the stock undervalued over? I don't know. So I'm looking at this thing and saying, okay, from a 500-foot view, we've seen a company go from making a lot of money to losing a little bit of money, but their stock price has paid for it. If you remember, even go back before February, before it was $350 a share, and go back in the last 5 years, their stock price is over $400 a share as recently as early 2019. As recently as 1 year ago, 1.5 years ago, their stock price was over $400 a share. Got as low as 85, 89, and now it's sitting at 182. So I'm looking at these things saying, okay, the market is punishing Boeing, which they should. Now the question becomes are they punishing it too much or appropriately?
Why do you say which they should? Because they had problems, or?
Yeah, I mean, they're going to lose. There's an unknown situation. The unknown right now is how much is that 737 MAX situation going to cost them? Because we don't know. It's not done yet. Mm-hmm. They still haven't figured it out where it's done and saying, okay, guys, we're out of the clear. We're out of the problems. We don't know what's going to happen. So you just sit there and factor that in there. So then you want to go, and part of the analysis is, let's go look at their balance sheet. So remember, the balance sheet is their basically snapshot of how the company's health is. What are the assets? What are the inventories? How much cash do they have? How much debt do they owe? Those kind of things matter when it comes to companies that have issues. Remember, if a company has a lot of debt and then they all of a sudden lose a lot of revenue and lose profit, it's going to be harder for them to stay solvent than a company that doesn't have a lot of debt. Correct? Mm-hmm. So I'm going to go back and look at annually. Right now, their current assets, that's the money on hand, inventory, everything, is $102 billion. And as you can tell, going back 10 years, it grows very nicely, Uncle Seth.
40, 57, 65, 68, 85, 102. Total current assets, $102 billion.
So cash and inventories basically on hand are $102 billion. Now their inventories are $77 billion. I won't get really into that one. That's a big chunk of it. But their inventories are worth something even in liquidation. But right now, I like the fact that I see very consistent current assets growing. So then we want to sit there and say, okay, do they have enough on hand to pay their current debts? So we go to the liabilities section. And the total current liabilities are $97 billion. Okay, so they have enough on hand to pay their debts. So essentially, what that's like is, if you personally have $100 in your bank account and you currently owe $97, is that great? No, but you don't have to worry about paying your bills this month. You're going to pay your bills.
What companies are upside down in this?
A lot of companies, like Tesla's upside down. A lot of bigger companies, even like real estate companies. A lot of real estate companies have a lot of debt, and they tend to not have enough cash. They have to sit there and wait for money to come in, et cetera. So there are a lot of companies that have less money on hand than current debts. But there could be other reasons for that. You have to let's sit there and analyze the current liabilities. It's based on IRS timing on how this could be. So you want to look at the history and see if it's a consistent thing or not. But as we see, they basically consistently always have enough money to pay off their debts on hand. Is it by a lot? No, but this could also have been 2019 where there was a bad year and they had to owe more money, etc. So I'm liking this from that standpoint, right? So then you have to sit there and say, okay, let's go see the multiple. Let's go see their cash flow. If everybody remembers what free cash flow is, free cash flow is cash from operations minus capital expenditures. Again, they didn't make money last year. They lost a lot of money. So I'm going to exclude this year. Before then, though, oh, look at this. $15 billion minus 1.8. All the way down to here.
Wow.
Yeah, they've always had very decent free cash flow and growing. They've had it growing free. Their capital expenditures have stayed the same or decreased, but their cash from operations keeps increasing.
You like that?
I like that a lot. So the key with Boeing here is their free cash flow in a normal time is very solid. So then you have to decide, how much am I willing to pay for that free cash flow, right? So let's sit there and say they had $13 billion here, they had $12 billion here, and I'm rounding. $12 billion here, they had $8 billion here, and they had 7 here. That's an average of 15 and 25, 40 divided by 4. It's an average of around $10 billion in free cash flow per year. Mm-hmm. Okay, normal times. For a company like Boeing, for any company, I like to buy in single digits. So if they're selling for if they have $10 billion in free cash flow on average, I want to pay less than $100 billion. 10 times free cash will be $100 billion. Now, One would argue that Boeing is a leader in the industry. They're going to be around for a long time. You could probably pay a higher amount of money just because it's a safer company. So what are they selling for right now? So if you guys remember, market cap is what the company is selling for. I sat there and said that I want to pay around $100 billion or less. Their current market cap, 103. Interesting. So I don't want everybody going out there and saying, buy, 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 buy. There are still unknowns, and that's the hard part about stocks. You will get the best deals on the companies that have the most unknowns. We still don't know how the 737 MAX situation is going to turn out, how much it's going to cost them, how it's going to hurt their revenue. Do they have more years of losses coming ahead? You saw their revenue went from 100 billion down to 75. Are there more years of that coming up? The industry now, airline industry has been shut down because of COVID. Are there going to be delays in orders? Are there going to be cancellation of orders? To me, my personal opinion is this is still too high of a price without the unknown, without things being known what's going to happen. Now, with that said if you're somebody who sits there and says, listen, I look at Boeing and say, it's 180, it was at 420, I want to buy some, just don't buy a lot. If you want to have $10,000 in Boeing, maybe you start by buying 2,000 today or something like that. I'm not telling you to do that, but if you really want to have Boeing because you think long-term, once they get back to normal, they'll be a $400 company, which, by the way, I don't think they'll be a $400 company. I think they're probably worth around $250 to $300 normal. So this is not a big enough discount to me with the unknowns going on. So my personal opinion is, do you want to wait for it to hit here again? Sure. Is that going to happen? I don't know. But I think with the unknowns of Boeing, I would be apprehensive at $183 a share. Doesn't mean that you can't make a lot of money doing that, but from the standpoint of where we stand today with the unknowns on the 737, it's a high price. With that said, the second the 737 situation is figured out, I'm sure their company stock will go higher. The question is, where will they be at that point when they finally figure it out? Any questions?
Incredible.
I don't know about incredible, but it's something.
You know your stuff.
Please like that button if you like this analysis. Yeah!
Smash that like button. Follow us on the YouTube channel. And thanks always for your support. We're doing videos twice a week. And look back, we have hundreds and hundreds of videos prior to this one about Paul talking about stocks, real estate, and investing. As always, for Seth and Paul on the Everything Money channel. Thanks for following, guys.